on the back of that trading update, I'll be very surprised if these shares don't rise higher in the run up to the actual full year results announcement.
And joining me on the podcast and on video is Alan Green, CEO of Brand Communication. Joel.
Oh, I'm very good, Just. How are you?
I'm all right. I feel a bit so jaded still from the weekend activities. In fact, football. Well, in fact, we'll talk about that later because
talk about it later
probably,
because
take over the entire podcast otherwise, probably.
My head's still banging too.
I I've been listening to 10:30 today was Rachel Reeve. This fair play the Labour. They're not hanging around. They're doing stuff.
Well, I have to say, I mean, literally, as Keir came in on Friday morning, he just got straight to work. I mean, there was no messing around. I'm going to do this. He's just basically signposting everything he's going to do, and he's doing it. And he's reiterating the point that politics is to serve. We're here to serve you, and this is what we'll be doing. We're accountable to you. We'll show you what we're doing. We'll show you how we've done it, and you can judge us on the results. And so far, he hasn't put a foot wrong.
Yeah. Well, Rachel Reeve today said she's going to basically vow to take difficult decisions to fix the foundations. They're going to reform the national planning policy framework in order to deliver infrastructure. The government will restore mandatory housing targets. An effective ban on onshore wind developments will be scrapped. So, they said a lot of time the Conservatives brought in this policy where even if it's one or two protests, and then, a wind farm wouldn't go ahead. So, but no, I think it's, if it's in the greater good, then it should go. I was amazed how they were saying here, where was it? How much wind, we basically effectively hasn't increased our wind capacity since 2017. So it's unchanged. Still got 3,000 megawatts of wind. By contrast, France has more than 22,000. That's compared to our 3,000. Germany has 61,000, and we're still basically at 3,000, which is rubbish.
Well, having ridden a motorcycle through Germany over the past week, I can assess that the past few weeks rather, I can attest to that. There are wind farms literally everywhere, and these. Okay, I mean all wind turbines are big, but there are some very, very big ones in Germany operating in the hills, in the Eifel and around, and it's got to say. But also here offshore in Brighton, a wind farm's gone up in the past few years. So I'm sure that's an old number. I'm sure that
no, it's in offshore is not a problem. It's onshore where the planning was the problem. So there's obviously people saying, "Not in my backyard," and they wouldn't get done. And I think to Conservatives tighten up the planning on it. Basically, it was an effective ban. You couldn't get one away because and of course onshore, a lot more affordable than offshore, because offshore you have to, it's hard work. They're sort of making this.
Oh, it is. Yeah.
But I don't mind them too much. Honestly, I know people complain about them. I think they're quite nice. They just go around nice. It's not like they're quite. They cut through the air quite nice. They're quite smooth little things. I don't know if I want them in my back garden, but I don't mind them. They're like little windmills, aren't they? They're fine.
Well, I saw a video clip on Twitter a couple of weeks ago about somebody who was complaining about the effect that the wind farm had on their back garden, and the sun was shining. It was a brilliant day, and the shadow was sweeping across the garden every few seconds, and it did look quite ominous, actually. I think if I had to live with that, it would be an issue. So there will always be some properties somewhere that will be affected by it. So I understand why.
I suppose there's plenty of areas in the country where they're not overlooking residential estates. There's plenty of land, isn't there? Greenbelt land or whatever you can build them on. It's not. Yeah. It's plenty. I mean, if you fly in, from abroad on a plane and you look down, literally, Britain seems it is it's less than 2% built up area of the country. So it literally, even when you're on the motorway, they look quite big, but from up above, they're like tiny little ribbons. They're going through green land. So there's plenty of areas I think we could build on. Anyway, let's talk about stocks now. What's first?
Okay, so I've got three stocks for you today. I interviewed the chief executive of one company, electric guitar, that we're going to talk about shortly. But firstly, I want to talk about a company that has an office just up the road from me. It's a company called Trifast PLC.
Oh yeah,
TRI is the
yeah.
EPIC code. Long established company, and also one that was a great favourite of a guy who sadly passed away last year, David Paul. He was the director of Vectorvest, and a great gentleman, a lovely guy, and sadly missed. But he was a big fan of this company, so and it was one of his big cash generators. He was always supportive of the company. And this company is the main group is TR Group. So Trifast PLC owns TR Group. TR stands for Trusted Reliability, and every time you go into WH Smith's, every time you order an IKEA flat pack, you'll have all these fixtures, fasteners, fitting, screws, nuts, bolts, washers, circlips, O-rings, etc., etc. This is what Trifast do. They operate in 70 different countries around the world, and you've got literally every sort of fixture, every fitting you can think of. They manufacture it, and over the years they've acquired companies to bring them in to broaden their manufacturing base, and the industry sectors they operate in include lighting, telecoms, computing, business machines. They supply fasteners for light vehicles, that's cars and motorcycles, heavy vehicles, of course, coaches, HGVs, and so on. They provide logistical and distribution solutions. They also supply health, home, energy, tech, infrastructure, and general industrial. Pretty well anything that needs any sort of fastener, they provide it. Now, we had a trading update in April this year. The full year results have been pushed back a few weeks. They're going to now be announced on the 6th of August. But in April, they reported a resilient performance in Q4 despite continuous subdued demand. And results for the year are expected to be marginally ahead of guidance. They're aiming to hit annualized savings of 3 million sterling per annum next year, and at present they've got a number of bases around the country. I mentioned Uckfield, of course. That's where the company Trifast and TR Group are based. That's where they started, but they are consolidating all these operations into a national distribution center. That process slightly behind schedule, but I think it has just been completed in the past few days. So previously, full year to March 2023, revenues grew 9% to 244 million. Gross profit was up 25%. Also, savings were identified that year of 5 million. The debt levels at that point were 38 million, and also the company was happy to pay a final dividend of 1.5p, which is up 7% on the previous year. This year, they expect that net debt to have come down from 38 million down to 27.8 million. So the leverage on the group will be less than 1.3%. Last year was also their 50th year, but I think the telling thing is that they're turning over that sort of money, and in actual fact, their market capitalisation is just 97.7 million. So I think once they deal with that debt pile and lower that gearing further, then we should see the share price really start to recover dramatically, and also start to match those highs, say, of 2 to 3 years ago.
Yeah, well, they said they are on a cost rationalization program, and I think if they can actually bring the debt down, and also improve operations, bring those margins up, then you could see a nice little recovery here. But the broker's got a sort of a 113 target. But I was listening to a fund manager, I think Richard Staveley was, saying they've got the contract for black cabs. I don't know if he says 1,000 rivets in there or 10,000 rivets in each black cab, and they've got the contract for that. So but it was it's a very good business. It's gone through hard times, of course, and like I said, with that 2018, it hit what 275 share, 71 pence, and it seems to have come into a little range here. And it may need to consolidate for a while, but that's just maybe a bottom is in, because it has been lower than this. It dipped down, the worst points down to
66p was the year low,
50p,
wasn't it? Yeah. That was intraday, I think, but I think yes, yeah, that was the other point I was going to make. We have seen this share price consolidation over the past 6 months, and it's looking now that we're building a base, and I think all eyes at the results announcement in August will be on that debt level. If they hit that 27.8 million, or better still, if they lower it, if they take it down a bit further, then that's really going to send the right signal out to the markets. I think the thing with the business is it's a big cash generator, but also overheads are relatively high, and the consolidation, all those different branches into this one national distribution center, I think is going to really help their bottom line. It's going to mean they can offload some of the properties that perhaps are expensive to keep up, and they can consolidate that process into one place. So an interesting year ahead for the company. It could be a transformational year.
Yeah, like I say, it's yeah, they are. They say savings here, the bulk which should be delivered in full year 2025. So we're in obviously releasing to 24 now. So so for the half year, so you can see there,
Yeah,
the last full year they did operating loss of 8. Well, they did 2.7 loss, but then the half year they are profitable. They're
yeah,
what,
yeah,
with
yeah,
2
yeah.
million there. So
Mm,
yeah, so it's looking like it's going back to the profitability. It's looking at a forecast about 6 million. So
I
yeah,
think
so
that
these one to watch, decent business, but it's gone through hard times. When that happens, especially, and the management acknowledge that, and they look at cost cutting, look at efficiencies,
mm,
then you can get some good recovery plays. And I said they are actively doing that. They are looking at becoming more efficient and cutting costs and all that stuff. So yeah, it could. And I have put an alert on this. You see, I put an alert when it sort of breaks that 81 pence.
mm,
It did it back here, but it's never sustained. So maybe put a couple of alerts. First one here,
mm.
and hopefully they may start an uptrend. But yeah, I
Well,
think
I agree.
definitely one. Mm.
Yeah, I think just picking up on your point there, Jess, I think this company, historically, 50 years in business last year. So it's got that market, it's cornered that marketplace. It's operates in 70 different countries around the world. And it's through the difficult times over the past couple of years, it's addressed the high overheads in the business to some degree. That debt is starting to come down. Once it's in this national distribution center, it'll mean it can offload some of the premises it's been paying for. So the actual operating costs will reduce further still, and I'm sure they'll find other cost savings further down the line. But at some point we could see this move into delivering significant profit, and who knows, perhaps they can expand exponentially elsewhere in the world.
Cool. What's next, Al?
Okay, electric guitar. So
Mhm.
this is a company I interviewed the chief executive, John Regan, a couple of weeks ago, and we've just put out an additional clip on social media this morning. So we live in a world, of
What's
course,
that on the
where
chart there?
yeah, well, this is the company IPO'd, and we've kind of gone to a point. I think what you're seeing there is a lot of pre-IPO investors selling out and getting out of the company. But this company, I think, is it's in the marketplace, which is absolutely huge. We're all aware that when we, of course, browse on the internet, when we go onto Facebook or Instagram, you'll see an ad for something, or you can talk to somebody about a brand that you like, and all of a sudden you'll see it later on your browser. This is how data is captured at the moment by companies like Facebook and Google. They basically track your usage, and that data is then resold many times over without your permission. So Electric Guitar have come to market. They RTO'd 3 Radical Limited, which is a people first data investment company, to collaborate with companies around the globe to change the user experience and to make sure that marketers are using the proper rules of engagement to engage with consumers by forming meaningful connections, but doing so through forming these first-party data relationships. And this has been the big challenge. You've got these ads, you've got this huge marketplace which is worth getting well over £1 billion per annum, and your data is auctioned off, but it's your data. So these companies are working around the world, and they're collaborating with different organizations in order to give that relationship back, or control of that relationship back to the consumer. So June the 19th, we had a collaboration announcement with Digital Alchemy to deliver personal engagement market solutions, and also to help strengthen Three Radicals' presence across the Asia Pacific marketplace. So Digital Alchemy already have technology partnerships with the likes of Salesforce, Adobe, SAS, Braze, HCL, and they've collaborated to what they refer to as supporting hyper personalization strategies at scale. And what this does, it allows Three Radicals data to inform Digital Alchemy's decisioning engine to deliver, that's of course an AI engine, to deliver the right promotion or content to customers, which in turn creates stronger audience relationships and delivers higher marketing returns. So all of the cookies that are currently on your hard drive, from next year, that's going to stop. So this people first data is going to be where it's at, and companies that are at the forefront of this process are the ones that are going to benefit. Three Radical software is already deployed by major brands across the UK, US, and of course APAC. They're predominant in financial services, in online gaming, and e-commerce. And of course, when this Web3 switch occurs next year, that 90% of cookie data is going to be switched off completely. So we will then be able to take control of that process. So if companies want to serve ads to us, they have to ask our permission, and then we can select what we want to see, and we'll have a much better relationship with advertisers. So we won't have the current thing where these ads follow you around because you just happen to look at it on one browser. And that's how Electric Guitar basically makes its money. It makes its money through that process, and through supplying marketers with the tools to market in a Web3 environment. It's early days for the company. It recently came to market, but I know John and the team are working on developing relationships with other companies around the world engaged in providing marketing solutions to companies. So this is a work in progress, but I think this company is at a very exciting juncture in the evolution of the internet per se.
Mm. I mean, yeah, I think we mentioned this before, but there's another company called, it's a bit more advanced, and there's Silver Bullet Data, which I quite like. It's they're doing this. They've got some big contracts there.
Yeah.
SBDS worth looking at. Cool. What's next, Al?
Okay, so we've focused a lot over the past few weeks on companies that basically perhaps are a little bit boring, but provide really safe, reliable, and visible revenues and profit margins. We're looking at companies in finance a lot, and the third company today is one such company. It's a company called Time Finance, TIME.
Yeah. You've been looking at. Have you been sneaking a peek at my free tip service, Al? Because I have covered these, but I do hold stock in this company. Do you know what? It's funny. We talk about boring companies, but there's people who make a lot of money finding out boring, predictable companies.
Oh yes.
And it's not. When you realise going for a really exciting, high risk reward plays don't actually play out that well. They don't attain that reward very often. You're better off going for a lower reward with a higher chance of getting that reward, and that way you compound your returns properly rather than taking big hits on high risk ones. But I really like this company, and like I said, they did a trading update, didn't they? Which was fantastic. I mean,
well, they did. So I mean, Time Finance are, as you say, they're a boring finance company, but they provide commercial and business finance, asset finance, invoice finance, funds for loans and vehicles. They've won multiple awards, best finance provider, including Business Money Facts. That's a key publication. But they've seen real growth from asset-based lending. That sector is growing, or that market is growing at nearly 13% annually. And this is finance or lending that's based on assets. Often that asset can be inventory, in other words, stock that the company holds, can be on invoices, invoice finance. Of course, we've spoken about that before. Equipment, say companies has all the plant, maybe it owns that plant, it needs to secure more finance, so it refinances against the plant that it owns, and of course property as well. That's a long-standing form of asset finance. But very strong trading update from the group to May, trading to May 31st. Revenues up 20% to 33 million. Pre-tax profits 38% higher, up to 5.8 million. They also, the company works with affiliates, so affiliates will come in and go and resell the Time Finance solution, but they have their own book, and they've seen a lot of growth in their own book deals, up 25% overall to 91.5 million turnover on that on the year to May 31st. They also say, the team said strong visibility. It continues to support the business. Looking forward, unearned income that they're seeing sort of from contracts they already have, up 19% to 25 million. And also in terms of their financial position, they have headroom of some 60 million sterling at May 31st. So that's a lot of headroom to do an awful lot of stuff with. If you're going to, companies like this often acquire other smaller niche finance operators to enhance and embellish the overall offering. And they're seeing growth driven by very much by invoice finance, which of course, we've looked at the asset-based finance and also the hard asset subset of the wider asset division. Well positioned for future growth, further shareholder value to come. I mean, this is the company is looking in very good shape. Shares have been as high as just under 50p on the year, as low as 23p, currently trading at just under that year high. But on the back of that trading update, I'll be very surprised if these shares don't rise higher in the run up to the actual full year results announcement.
Yeah, I think it's excellent set of results, because Ed Rimmer, the CEO, took over I think it's in 2021, and they came up with this 4-pillar strategy, 4-year plan of just, they shelved a lot of non-core side of the business of draining the resources, and they focus on these 4 sort of pillars. And one of them is lending of your own book, but they're very conservative on. They don't take on high risk. They'll spin that off, they'll broker that out, so they'll get fees on the higher risk stuff. They'll get fees, but there's no risk associated with it. So they have fees and commission on that. But the key, like you say here, is own book lending, because rather than just getting in a fee or commission by brokering it out, it's on their own book, so they earn interest from that. And that is the unearned income that compounds pretty much. The bigger the loans they do, the longer it takes for, the more they earn of it, the longer it stays in their book for. Like I said, that was up, what was the unearned income of 19% to 25.2 million.
Yeah.
And obviously, the more profit they earn, the bigger their book gets. So they can, and they can loan more. So it's almost compounding that. And what's quite nice is this extended facility, like I said recently, with the British Bank, 64 million. And they're looking at about doubling their own book from 115 million, I think it was in 2021, to 230 by the end of this year and financial year. And they're already at 200 million. And I think with this extended facility, they should smash that target easily. Like I said, the bigger you get in this sort of situation, the better it is for you, because the more you can loan, the stronger your balance sheet, the more you can loan, the more money you earn. And so I read that, and so when I saw that trading up to wow, because I also thought that every figure there is pretty much double digits, and even their bad debts, that. So net deals in arrears reduced to 5%. That's from 6%. But of these, so only about 1% are written off. So the other sort of 4% do pay, but they're slow in paying. So that's excellent. Just 1% of net debt write-off. So I think it's a very well-run company. Even if we got net tangible assets, literally, that's pretty much the market capital, so it's not far off, So it's very undervalued, and it's like 0.8, and so at the moment you got what 48% upside here, but it's almost like it's almost a safe 48% rather than a high risk of 100%. But that will continue. That I can see that being upgraded as the more they loan,
Yeah.
and the more and an income they get, that will be upgraded. It's one of those companies that keep getting upgraded all the time. So yeah, an
As
excellent
you say,
chart
that
there.
yeah, as you say, they understand and manage the business really well in
Yeah.
order to minimize risk. And when you've got just 1% of bad debt, not being paid, that's a pretty acceptable acceptable metric, I think, for any company.
Yeah. And
To
it also is a structural problem behind why they're doing so well.
mm,
Banks apparently, and I did it in my sort of note out I sent out to share it, but banks are increasingly turning their backs on small and medium-sized businesses. They just say it's too high risk. They don't loan to them. They
mm,
loan to bigger companies, and I think like 89% of small and medium-sized businesses have been turned down by banks for a loan. And
yeah,
so this is why they're an alternative finance provider, and these companies are fine. They're decent. Like you see, only 1% are written off. So
yeah,
it's
yeah, yeah,
but look at the
yeah.
chart there. It's gone from staying above that 200-day moving average. I did say recently on Twitter when it dipped, hit 200, I said this is probably a buy the dip opportunity here. And they released a trading update a couple of days later, and it shot right up. It
Boom.
wasn't. I didn't realize at the time they're going to release that trading update. But
Mm.
literally that dip there, you can see there on that sort of support level. Pretty much where it dipped before, and so this is the kind of company where when it does dip, it does have some nice dips. I think when I bought it, it did dip down here somewhere. I bought it, just went back up. So
Well, I think there's good.
yeah,
I think you've hinted at or hinted at a wider strategy there, Jess. I think companies like Time Finance and other companies of a similar ilk that we discussed over previous weeks, um, their reporting structure is very rigid. You can set your watch by it almost. Sorry, that's a very old expression, I know, but you can almost look back at the previous year and the results announcements are give or take within a few weeks of each other. So if you see a chart like this, and perhaps you can look back at the previous year and think, oh, they put out their trading update at in the middle of July last year, and if the shares maybe are drifting down a bit, maybe there's a bit of underperformance or consolidation. It's often a good opportunity, just from a trading standpoint, if nothing else.
yeah,
If you've got no intention of being the company longer term, that would be a good signal, if you like, to buy into a company at that point, ahead of anticipating a good set of results. And if the trading update earlier in the year perhaps indicated that things could be going better, at the next update, then that's a pretty good bet, particularly if they're in this sort of business. So
yeah,
that's
yeah.
a
Well, I mean, it's very consistent. Like the long terms for loans, but I mean, I see this now that was a bit of from like I said, well, from February pretty much through to
mm,
June. It was in a sort of trading range up and down here. But it's broken out of that. See previous resistance here. So I can see that now in Mexico sideways where, but I can see that, starting the uptrend. And this, like I said, this is a uptrend here, went into a trading range, and you tend to get that, and then you get a further uptrend happening. So it's
yeah,
consolidated for quite a few months there, and now it's broken up into a new range. So I'm not saying it goes straight up. It may have to go down a bit, but hopefully this previous resistance will be a bit of support, and it wouldn't go
mm,
below sort of 44 pence. But I'd say again, as long as the fundamentals are intact, if it does dip to 44 pence, it could be an opportunity, But I'm not saying it will go down there, but there we are. Anyway, that's time. And when did you watch the game then, Al?
well, we had a big. The thing is, the weather forecast was pretty iffy, and
Yeah.
so we had a lot of family down. It was over the weekend. We had 14 people here on Saturday, and
Mhm.
I cooked a barbecue. It was great. I stood outside, and just cooked a
On your
barbecue.
own in the
Well,
rain.
yeah,
No.
no. It was sunny.
Oh, okay.
It was windy, but it was sun and cloud. Cooked a barbecue. Barbecue went well, so we had a great lunch. And during this time we were drinking Negronis, which are pretty hard hitting. So I had to pace myself while I was cooking the food to make sure that
Yeah, yeah.
I
Imagine the standard was generally going downhill. So,
make,
this one's not even cooked. Oh, isn't it?
yeah,
Okay, just put a
so
bit
it's a
of
bit
raw
pink in the
meat in
middle
it
here.
into the burger.
Yeah, so make sure all the food was cooked and then really attack the Negronis. So yes, it was,
Yeah.
but it's very funny because somebody in the family took a video of the penalty shootout, and of course it was some of the game was quite painful to watch, but overall I think I think they're managing games pretty well now, and certainly that penalty shootout and Ivan Toney's eyes, of course, that really has done the rounds on social media. He didn't take his eyes off the keeper; he just hit the ball. That was fantastic.
Yeah. No, well, do you know what? I watched the game at home. We planned to meet a few people out in the pub afterwards. But it obviously went on to extra time, so we watched extra time in the pub and the penalties, and that was mad. The pub went nuts. So yeah, it was.
Was it?
But yeah.
Was it a beer fest? Everyone throwing their
No,
pints in the
it's a family sort of pub, so it wasn't like that, But people
air?
were excited. I hate that. I would hate that beer being thrown
Oh,
all over me. Glad it wasn't
yeah.
that.
Me too.
So anyway.
Yeah. Yeah.
Okay,
But
but
so
I did say they're not actually the penalties are faultless. Let's be honest, but I said is they're still. I mean, they're better than the last game. They were going, but they were still passing backwards and going sideways. And if you saw Switzerland when they get the ball, they attacked. And I think it was like. I think at half time, Switzerland had like 3 shots on target. England none. I think have a shot for heaven's sake. If you get up to that area where you're in distance, cross it over, have a shot, do something because you're not going to score doing nothing. And that one time, then there's a corner and they pass it all the way back to the goalie.
I know,
England,
I
what
know,
are you
I know,
doing?
I
It's
know,
like
I know.
that's supposed to be a position of advantage. A corner. How can you pass it back to the
Well,
goalie?
yeah, every corner means a goal. So they used to
I
say,
know.
goodness me, yeah, every corner pass it back to the keeper. But to be fair, Jordan Pickford had a terrific game as well, and he saved that penalty at the outset, and I think he's saved a penalty in every single tournament for
Yeah.
the past 4 or 5 tournaments, which is an incredible record. So if you know your keeper's going to do that, then you can step up with confidence and hit your penalty. And those guys
Did
did
you
a
see his water bottle? I didn't realize his water bottle. He had a cheat
yeah,
sheet on his water bottle
I
saying,
know.
one of the players jump left, go right. Just it's very good.
Yeah,
But
yeah,
no, I think I did say actually. I said even though England did improve in that game, I don't think they're firing on all 4 cylinders. But I think the fact that they're getting through is a measure of class, really. I remember talking about rugby when in New Zealand sometimes they
yeah,
play badly and they still win. They still
yeah, yeah,
manage to
yeah,
win.
yeah,
Some they manage to
yeah.
get the win, and sometimes you get that. And you think, okay, I said on Saturday, I think England are going to win because they are slowly improving, so they're improving their next game and they can beat. And let's be honest, I think Switzerland was a tough ask, it was a good side, weren't they? So,
But they were
yeah.
a very good side indeed. But I think also, we're seeing, as you say, they're making incremental improvements game after game by game. Southgate's setup was different, so a little bit bolder, and it worked. And I think perhaps as a side, he's working it so we hit our best form, in the semi-finals and the finals. So
Yeah,
who knows?
hopefully
I mean,
just
mind
attack more, just
you,
take it forward more. I'd say
yeah,
anyone who kicks it back to goalie. I mean, if you are literally on in their half or just close there and you kick it back to goalie, you're off, right? I'm substituting you. We need to go forward, not backwards all the time. And if you are literally within 20 yards of the goal and there's a shot there, the couple of times that happened, I was looking for the perfect setup. It doesn't happen. Look at Switzerland, how fast they came up and shoot. They just did it. And
they did. Yeah,
so,
yeah, yeah,
so
yeah.
I just be more proactive on the attacking front. I think we'd be okay. Stop going backwards.
Well,
But hopefully
I
that'll
think I think we've got a tough ask against the Netherlands. I mean, the Netherlands have got Virgil van Dijk, of course, Liverpool, and Mickey van der Ven for Spurs, of course.
Mm,
That's the central defensive pairing. So both 2 great centre backs. So it's going to be tough. But
yeah.
yeah, I think we've got the talent to do it. I really do. And yeah,
Yeah,
exciting
it's
stuff.
funny. I was talking to the guy at the pub there who was with us. Mark said, "Why are you supporting England?" He said, "You're Welsh." I said, "I don't get the tribal thing. I think to me, on a basically, they're a home team doing
Mm,
well,
mm.
and secondly, it's good for the economy. It's like I said, invest. I want to
Yes.
see more people go through pubs and spend more. It's good
Yeah,
for the
yeah,
economy.
yeah,
So
yeah.
so it's a good thing. Anyway, cheers out. Speaking next week.
Cheers, Just. All the best.